Hello and welcome back to the Stocks with Tusky YouTube channel for my portfolio update for the 1st of August 2021. Sharesies has had quite a few updates and changes since the last update, and the portfolio's changed a wee bit too. As you guys can see, we're up to $9,387, whereas previously we were at $8,350. But most of that has been due to me moving my positions on stake over to Sharesies. One of Sharesies' updates was expanding the amount of companies that they have available to invest in, and since Sharesies just offers a better experience and they're not as slow to buy and sell on or put money through to, I've just closed out my stake portfolio completely and rebought those same stocks over here on Sharesies. So going into it, A2 milk. Yeah, one of the things that I'm not a fan of is they've recalculated how you do your profit and loss. So I think I was down like 20% in the last one, but what it's calculating in now was I sold at one point as it was dropping and rebought in at a lower position to lock in that loss. And yeah, now it's showing me exactly how much I have actually lost on A2 milk, so thanks for that. I've even added to this position since last month, and it's still smaller than it was last month, because the wee rally that we had didn't last, but crap happens. It's not going to recover until travel opens up with Australia, so that's going to take a while, between Australia and China specifically. But it is what it is. It's a long-term hold. AFT has still been doing nothing really. I think we're up slightly, but yeah, again, that's another one that's waiting on reopening before I expect it to do much. Beyond Meat is probably the reason we are down so much. We were up like 17% in the last one, and now we are back down. So with this one, anything under 130, I start getting interested in buying, and as you can see, I have actually had a few wee nibbles to add to the position, but being that it is my largest position, I don't want to add too much to it, but we start getting into those 120s, it just starts looking pretty attractive again. I may actually trim this position a wee bit the next time we do get a big spike, and earnings is coming up as well, so we could well see another big spike on earnings as shorts get shaken out. It seems to just be the cycle with Beyond. Shorts load up, drop the price down, we get some kind of good news, all of the short sellers get wrecked, and we boost up for a wee bit. So not that I want to be trading, but and I certainly don't want to be designated as a trader. IRD, don't tax me, bro. But I might trim this position a wee bit next time I see a big spike in it. Still love the company long term, but it is actually shifting my portfolio quite a bit just when it does this, essentially. Next up, Coinbase. Crypto's going through a hell of a rally at the moment. My crypto's doing exceedingly well. Coinbase, on the other hand, hasn't really done all that much, but hey, more of a buying opportunity. I may add to this position a little bit. Next up is a new one. Well, a new one that you guys have seen anyway. I've had shares in Corsair for quite a while now. There's a large investment firm called EagleTree that own quite a lot of their shares, and anytime we see any kind of share price spike, they sell off. So this thing, despite it being criminally undervalued, we're not going to see any movement until they run out of shares. Hilariously enough, that big spike there was actually Wall Street Bets trying to pump the stock, and then EagleTree immediately took the opportunity to sell off some shares. So I don't think they quite realised what was going on with that when they tried to pump that one, which is unfortunate for anyone that got caught holding the bag. Next up, Upbox. We can't call it Dropbox. It's an absolute beast. I honestly reckon, like, my price target for this thing was $40 by the end of the year. I reckon we might end up getting there a lot quicker than I actually expected. This thing has been carrying my portfolio for a bit. and it's one where I really wish I'd bought more shares earlier. I should buy more now, to be honest, but once averaging up just feels bad. Energy transfer. I was buying this one for the dividends anyway, and for the potential increase in dividend that's coming up. The share price has dipped a wee bit. I think I actually bought once or twice. Yeah, I've bought a few times. I should be adding more to this position actually. Excellent long-term dividend stock. I may not. I'm looking at opening an Interactive Brokers account and just using that as a dividend growth portfolio. So I probably won't add too many more dividend stocks to this one. This is a mixed growth value and dividend portfolio. So I kind of just want to see how the dividend growth portfolio compares against this one and just run that as a wee experiment. Next up we have another new position, albeit a very, very tiny one. Eero did a capital raise to buy out some of their competition. They're a trucking logistics tech company. They basically do, I even made a video on it actually. I won't break this one down too much. If you want some information on that, go have a look at my Eero video. Shameless self-promotion. But yeah, they had a capital raise. I had like $50 in the portfolio at the time and tried to get in on it, and unfortunately it was oversubscribed and I only got $7 worth of freaking share, which is that buy order there that hasn't completed yet. So, unfortunate. This is only going to be a small position for me anyway. I might build it to maybe $100, something like that. My history with picking growth companies has been, yes. Alright, next up, Hallensteins. We have just been trading sideways on this, even slightly down, but as you guys can see, I have added significantly more to the position. I might get this one up to maybe $800-900 to match the next one up, Heartland. It even has a nicer dividend yield. I think this one is going to move, but it will be when next earnings and guidance comes out. Australia is still in lockdowns. There's a lot of fear over that. It's just been getting worse, essentially. So until we know what the impact's been on their business, probably just going to trade sideways or slightly down for a bit longer, which is fine with me because it's given me enough time to build out the position to the point where I want it to be. Next up, Heartland Bank. I have added to this a little bit. We've even dipped a wee bit on this one. It's around fair value. I am expecting them to raise the dividend as soon as they're allowed to by the Reserve Bank, so yeah, this is just a never sell. Probably won't add too much more to it, purely because it is such a big position, but that is what it is, so I'm quite happy with it. Next up, Metro Performance Glass. I don't think I've added too much to this one. I've had a wee nibble at it. But yeah, they've declared a dividend coming up, I believe it was next year, just off the top of my head. So, and they are becoming profitable. So, just keen to hold on to that one for now. I probably won't add any more to that position. I'm quite happy with that one actually. Next up, OCA. I am very bullish on the retirement home industry in general. They have a brilliant business model, and Oceania had the best valuation of what I was looking into at the time. I've added to this position slightly. I could stand to make this one a $1,000 position, so I really should be buying some more. But we're doing fairly well on it. Doing reasonably well. I should actually be buying this, to be honest. I should be adding to that position. And the last two are both positions that I have had over on stake. Tattooed Chef as a financial education pick, essentially, one that he's put me onto. Probably going to leave that about the size that it is. Maybe bring it to a 300 to 400 USD position at most. I already have a lot of money in Beyond Meat, so I don't actually like holding multiple stocks in the same industry if I can avoid it. That was part of the strategy for this portfolio, was my way of diversifying is by only having the best play in each industry. But yeah, this is an exception that I'm making, basically. And the last one up is Walgreens Boots Alliance, which is another dividend growth play. I probably won't add anything to this in this portfolio. I'd say I'm going to build a larger position in this over on Interactive Brokers. Whether I actually reveal that one to you guys or not, I'm not too sure, because there is going to be significantly more money going into that portfolio than I will be contributing to this one. But that's about all we've got time for, guys. Cheers. Later.